When I was doing my CA education, I used to think that people having credit card must be very rich people. So I also wished to have credit card at some point of time in my life. Hence, immediately after completing my CA, I opened my account with HDFC Bank. And when they offered me a credit card, I was super excited about it. No doubt, when you own your first credit card, it can be exciting, tempting, and intimidating. You can reap plenty of benefits with each expenditure you make. Moreover, it opens the window to various other financial offerings. It will not only give you the much needed breather, but also provide you with the means to get back on your own 2 feet without relying on anybody else. But be warned, credit cards can become a proverbial double-edged sword. Not only it will protect you, but it can also harm you if not utilized wisely. In this video, I am going to share what are the facts of owning a credit card and what are the rules to be followed while having one. Hi, I am CA Jithendar Patel and I am on a mission to help entrepreneurs with financial advice to build a profitable business. To ensure that you make the most of your credit card, here are some of the facts you must know before you start the process to own one. Fact number 1. Be aware of the feeling that you have a lot in your pocket. Having credit card in your pocket makes you feel that you have a lot of money in your pocket, which can be both advantageous and disadvantageous. Advantageous in the term that you can face unforeseen emergency with confidence, like hospitalization of any family member, where the hospital asks for immediate deposit of money before admitting patient. It can also be disadvantageous in terms that the feeling of having a lot of money in the pocket. By having a credit card, we tend to spend more than required. Fact number 2. Interest charges are 3 times than that of the normal loan. The interest charges in case of default of credit card payment is to the tune of 30% to 36%, which is very high when compared to a normal loan, which is around 10 to 15%. This can also lead to a vicious circle of financial trap. Many youngsters fall into this trap and buy things on EMI to be paid through credit card. For example, whenever a scheme comes like 1 rupee down payment and the balance with credit card for iPhone of rupees 1.5 lakh, many youngsters get excited because of the attractive advertisement and they take the phone on EMI. Later, paying this EMI on a monthly basis can be cumbersome and tedious because of lack of income. In case of default, the bank starts to charge high interest rate of 3% per month. Fact number 3. Entice to spend more than your income. As discussed earlier, having a credit card will entice you to spend more than your actual income. This can put a brake on the financial management of your income. There is a quote which goes on saying that if you buy things that you don't need, one day you will be forced to sell things which you need. Hence, it is not advisable to take credit card if you are not financially disciplined. Banks are after you to sell credit card because they make more money out of credit card transactions and through defaults. Having decided to own a credit card, here are some of the rules you must remember and follow before you opt to have a credit card. Rule number 1. Consider and compare the fees, interest rates, and benefits of various credit cards. All credit cards come with different fees, interest rate, and several benefits. The ideal credit card you want to choose should have the lowest fees, lowest interest rates, and benefits that matches your financial needs. While there may not be a single credit card option that will offer you the best of all these 3 features, you can consider and compare the available option that will match your usage and needs. Rule number 2. A credit card is a big responsibility. Credit cards works very simple. The issuing company will lend you money on each expenses you make on the card. After a certain duration or even an expenditure limit, you will be responsible to pay off the borrowed funds within a given time frame. If you fail to do so, you will attract a high interest rate on the payment delay, which is around 36%. It is advisable to be mindful of this before taking a credit card. Rule number 3. Stick to one credit card. When you apply for a credit card, there are chances that you will receive many offers for different credit card types. However, this does not mean that you must sign up for each offer you receive. As a first-time owner, it is best to opt for a single card. You can choose the right card based on several features that matches your needs. Remember, the more the number of cards you own, the higher are the chances you increase your debt. Rule number 4. Opt for a low credit limit. Spending on a credit card can be tempting as it offers you high expenditure. However, high expenditure equals to high repayments, which you may not afford. This is where your credit card limit can help you. Depending on your credit limit, you can calculate the estimated amount that you can afford to spend without going over your repayment limits. Rule number 5. Pay off your entire credit card balance before the end of your billing cycle. You need to pay off your credit card balance within the given credit card cycle, or else you will earn late charges. Paying off your balance within the given period will not only help you to earn a good credit report, but also help you in inculcating good habits in the long run. I hope this gives you a clarity as to whether you should own a credit card or not. Do like and share the video if you find the content useful. And do not forget to subscribe to get the regular updates. If you want me to make videos out of a specific topic, do let me know in the comment section. This is CA Jithendar Patel signing out. See you in my next video.